Welcome back. I'm Ted Thomas, and in this episode, I'm going to answer the question, can IRA funds be used to purchase real estate? So what's IRA funds? That means individual retirement account. So some people call that a traditional IRA, or could it be a Roth IRA? So let's talk about that. I'm also going to give you some inside tips on how to make money using IRA funds. And I'll also, at the very end of the video, show you what not to do at auctions. So stay tuned for that, because you don't want to make these mistakes at auctions. I'll be right back. Okay, can IRA funds be used to purchase real estate? All right, well, let's learn a little bit about it. So first of all, there's a lot of hype out there, everything from insurance companies to banks talking about IRA funds. All right, now if you're buying an IRA at your local bank, it's not going to do you any good. If you're buying one from an insurance company, it's not going to do you any good. Yes, they'll tell you that that's a self-directed IRA, but that's not what we mean. You need to have an IRA fund that you're doing yourself and you're funding yourself. No banks, no insurance companies, you're doing this yourself. Now the whole tax lien business has changed, the tax deed business has changed, it's just getting better and better every year. And that's because we went online about 10 years ago, but it's now becoming sophisticated enough so it's a much easier business. It wasn't so long ago, we had to trudge our way over to the county, get a list, and start from scratch. Now you can sit right there at your computer and you can do this online. Tax liens and tax deeds. But hold on, what we're trying to talk about today is individual retirement accounts, either a traditional IRA or a Roth IRA. And yes, you can purchase real estate. All right, now Ted Thomas is not an attorney, I'm not a broker, I'm not a CPA, I'm not an IRA salesman, I'm none of those things. All right, I'm just an average guy, a little bit street smart because I've been doing tax liens and deeds for 30 years as an investor, and I've pretty much specialized in teaching people how to do this over the past 25 years. So yes, you can use those individual retirement account funds to buy real estate. So you want to start learning how to do that. All right, now, with a traditional IRA, you can take money out from what you earn and put it into the IRA and start investing. Now, once you have money in there and it builds up, then you might want to have a Roth IRA where you can pay taxes when you buy, and then you don't have to pay taxes again for the rest of your life. I have clients that own 30 or 40 or 50 even properties in their IRA, their Roth IRA. So all the growth in that IRA is tax-free for the rest of their life. So let's say they bought a property that was $100,000 and they paid $20,000 and now they're renting the property and they sell it in 5 years for $75,000. Well, all of that profit from 20 to 75 is tax-free. Now they can take the whole package of money, say $75,000, invest that, and they don't have to pay taxes on it. That's the way to grow your wealth quickly. All right. So IRA money is very important, not only to take the tax deductions, but it's also very important to use the Roth to build up your retirement. So if you don't have to pay taxes and you can do it legally, that's the way to do it. So this is up to you, and you should learn how to do it. All right, so I'm just a layman person. I'm not a CPA, I'm not an attorney, I'm not an investment advisor, so I'm not the guy to get advice on all this stuff from. I can help you with the tax liens, the tax deeds. Now, how are you going to do this? Well, when you're going to get to the auction, some county employee or the auctioneer or someone's going to say, how do you want to title your purchase? And if you're buying property, do you want to title it in your own name? That's okay. But if you had a traditional IRA or a Roth IRA, that would be better because of the tax situation. All right, now I can't give you tax advice. I'm not a CPA. I'm not qualified, but you're getting the idea, I'm sure. Tax deeds and tax liens work for IRA, so you need to start thinking about that. All right, now why is the county doing all this? The county needs money. So what they're going to do is they're going to sell properties at auction. They want the money to pay for all their bills. In other words, the county employees, the police, the fire departments, all those things. If the owner doesn't pay, they're going to confiscate the property. And when they do, they're going to sell it. And if they sell it for a low price, well, and you had it in a Roth IRA, and then you could sell it for a higher price, all that could be tax-free. Happens every single day of the week. Now, this is a little short lesson for you today. I'm going to do 2 questions, and then we're going to move on to 2 things that I need to make sure you don't do when you go to an auction.
How do you rely on the county's website when they say their information isn't guaranteed correct?
Okay, so the question is, how do you rely on the county's website? Well, the county's smart enough to disclaim everything. They don't want you to depend on them for anything. So if they give you a dollar amount or a number or anything on their website, go check it out. There's always plenty of ways to check. For example, if they tell you a property has so many square feet in it, well, you could go get the building plans at the building department and find out. If they say a property is worth X dollars, $200,000, well, you could go drive up and down the street and ask, or you could go to Zillow, or you could go to multiple listing. The point is, anything that's listed by the county, including giving you a deed, you should question it, because they might give you a quit claim deed that disclaims any problems that are on the property, and they're just passing it on to you. So I hope you're getting the idea. Check it out, because the only way you're ever going to be safe is you check it yourself and you know exactly what's going on. All right, now let me go to kind of finish up today, and there's two things that you need to be careful of, and you need to be very careful. Number one, don't buy a property unless you've seen it. Now, when I say you've seen it, I mean with your eyes, and you've had your boots on the ground. Now you say, Ted, I'm buying online. Okay, if you're buying online, then hire somebody to go look at it. There's companies that will look at it. There's paralegals that go out and look at it. There's real estate brokers that look at it. If nothing else, you'd have an Uber driver go there the night before, take a picture of it and send it to you so that you know it hadn't burned down. But you need to look at the property. So that's number one. All right, newcomers make that mistake all the time, and they pay a terrible price because they get there and they find a slab. The place is burned down and cleaned up 2 years ago, but nobody knows it. All right, now what about the other rule? The other rule is exit strategy. So you don't want to be bidding at auctions unless you have an exit strategy. Now that was easy to say. See, the challenge is you're excited. You spent time, you spent money, you learned how. You're very excited, you want to get something done, you're determined you're going to buy something. Well, you don't want to buy or bid on anything that you don't know what you can sell it for. And if you're so excited that you do, you'll probably lose money. Why will you lose money? Because you'll be overbidding. Online bidders overbid all the time. So don't be an online bidder bidding over. What you want to do is know what your exit strategy. All right, so it's time for me to button it up. But I have a gift for you. So I appreciate you watching the videos. I'd like to have you as a client. And if you join up with me, you can do that right below me when I finish. But first, let me give you a gift. And the gift is this. It's a short course. It's called a mini course, and it's a fast start, teaching about tax liens, teaching about tax deeds and the profits you could make. And it's absolutely free, and I want to give it to you. And to get the free mini course, just go below me and register it, and I'll see you on the next video.